Hello everyone and welcome to the March edition of Price Know-How Snippets. My name is Katherine White. I'm Managing Director here in Plastribution and I'm joined as always by our Chairman Mike Boswell and our Product Manager for Polyolefins Ian Chisnell. Mike's going to start us off by talking about some of the fundamentals that are likely to impact polymer prices. Over to you, Mike.
Thanks, Catherine. Well, we live in interesting times, of course, with the American action on Iran and retaliations. But I will start just by looking at the January and February numbers, and then we'll talk a little bit about what's happened in the last few days. So starting with crude oil, in January, a barrel of crude oil cost you $64.15. That jumped up to $70.23 in February, so an increase of $6.08. The minimum also went up from $59.96 to $66.30, an increase of $6.34. And the maximum went from $70.71 to $86.80, an increase of 16.09. And again, it was interesting, the range really increased as well. So the range went up from $10.75 to $20.50. For those who like our prices in pounds per tonne, in January, it was £357.40, and in February, that had gone up to £389.64. But a lot has happened since then, and if we looked at the price today, it was $83.54, if I looked earlier on. That equates to £463.50 a tonne, or an increase over the January price of £106.10. So that's going to give a bit of a flavour, I think, to what Ian's going to talk about in a moment in terms of what producer expectations are. But that's a big jump forward. Exchange rates, probably it's a slightly different story here, actually. So if we looked at the pound euro in January, 115, in February, 115 against the dollar, 135 in January, 136 in February. That was looking like heading in the right direction. In reality, what we've seen in the last few days is actually the pound weakening against both the euro and the dollar. So again, if you look today, you'd be about 134 against the dollar. So that's a drop back, and that will bring inflationary pressure, both in terms of oil price and also polymer priced in dollars. So that's probably a good point for me to hand over to Ian. He can talk about what's been also very interesting in terms of changes in the monomers and polymers market. Ian, over to you.
Many thanks, Mike. So as Mike talked about, we had an increase in oil price, led to an increase in naphtha. Propylene settled at plus 35 euros, rising to €1,000 a tonne. That settled on Friday last week. And that's relatively significant. Ethylene didn't settle until late on Monday. Different picture, settled at plus 50 euros a tonne at 1,145 euros a tonne. However, largely the monomer settlement is a little bit irrelevant as we go into the month of March, because everybody is looking for very, very significant increases. The reasons that Mike just spoke about, the oil's going up. But what's going to matter more in this situation is the supply and demand dynamics. So the number that's been talked about and has been talked about by a number of producers is 200 euros a tonne. That appears to be applied across the board, all polyethylene, all polypropylene products, translating to somewhere in the region of 175 to 180 pounds a tonne. It's a very, very significant increase. It feels like it's exploitative. However, we should really put this into the context of where we were like a year ago. So you look at the spot price for homopolymer compared to the contract price for propylene, and it was positive 35, 40 euros. At the end of last year, it was negative 65 euros. So we've seen an erosion of producers' margin all the way through last year. And this, to a certain extent, is an attempt to restore those margins. We got to look at, European production of petrochemicals. And there's hundreds of thousands of tons of spare capacity within European petrochemicals that can help to fill this gap that we're going to face with the lack of imports from the Middle East. They will only turn that on and turn it up if they can achieve these prices, which are profitable. And this 200 euro a tonne increase that they're talking about is barely enough to make them profitable. Sounds a lot, but in the context of European production, that's where they need to be in order to justify upping the WIG and producing more material that we need. because we're going to face a lot of shortages. There's so much material that we rely on for HDPE, LLDPE, polypropylene that comes out of the Middle East, and in particular comes through the Strait of Hormuz. So there is some production which has been switched off. I think in Qatar and other areas, they've actually stopped producing polyethylene, but more importantly than that, they can't get it here without an extreme amount of logistical difficulties. So we're going to face a supply crunch, and consequently the prices are going to reflect that supply crunch. Don't quite know how long it's going to last, but it's certainly going to be into the many months before we start to see some sort of return to normality, depending on how long this situation lasts. So there's going to be more detail coming as the picture evolves, and there will be a more detailed review of this specific issue in around about the middle of the month. But until then, if you need anything further, please don't hesitate to get in contact with any of us.
Brilliant. Thank you so much, Ian. Thanks, Mike. And as Ian says, there'll be more information, and the situation's rapidly evolving. So if you do have any questions before then please get in touch. Thanks so much.